Hello everyone, hope you're doing all right. How are you doing, Jameson? Hope you're doing all right. Let's get it started. Today, execution intro. Very exciting topic. I'm very excited today to talk about execution. So this is the Notion, as you know by now, the trading dashboard Notion execution. Let me just guide you through it real quick. Trading dashboard, the homepage, progress. Right here, we've done a higher time from analyst. We've finished it yesterday, of course, not fully finished it. We'll touch on it with execution as well, but less emphasis. If we click on execution, right here we have, yes, perfect. Right here we have basics. Let me click on it, basics. So this is something for you to fill in. The Notion, and I've done this deliberately, so it's done on purpose. The Notion doesn't really make sense if you are not watching the videos. And of course, that's to sort of push you to watch the videos and combine the Notion with it. So first off, determine the type of trader you want to be. Now, this is a very personal thing, very time related as well. A swing trader, position trader, maybe a scalper, maybe whatever. But of course, that's very dependent on you personally. I can't tell you what you should do. I can't tell you how you should trade, etc. So that's a very personal thing. Same for session. I don't know your hours, etc. Determine your pair. Master one execution pair. Now, this is, of course, if you are, like I said in the higher time from analyst, if you are struggling with being consistent right now and being consistent on one pair, then master one execution pair first. So you can do a high time from analyst on multiple pairs, but only focus on executing on one pair. And when you are a bit more advanced and you feel like you're limiting yourself, when that one pair is in consolidation for a whole week, then you can take a look at multiple pairs, etc. But this requires some experience. This requires emotional control, etc. Use timeframes efficiently. Example, 4-hour PDA, 5-minute entry. Use rule of 60 as a general rule of thumb. Then change it to a number nearby by using logic and seeing what you like best. So this is a fun little rule. If we take the 4-hour, for example, well, the 4-hour is obviously, we want to confirm it on something on a minute. So somewhere in a minute. All right, 4-hour PDA, how many minutes is 4 hours? 4-hour care, 4 multiplied by 60. Multiply by 60, then divided by 60 as well. So that's the rule of 60. You divide 240 by 60. Sorry for the math class right here. That's 4. Now 4 minutes is very precise for me. So I like to round it, either 1 minute. 1 minute is a lot of price action for the 4-hour. So then I like to take the 5-minute. All right. Then for the daily, a day, how many minutes are there in a day? Let's take a look. There are 24 hours in a day. Times 60 divided by 60, that's 24. So 24 minutes is something you'll get. All right, now I don't like 24. It's very specific for me. I like to have something, maybe 30, but 30, there's not a lot of price action. So what I did, I checked the chart and I noticed 15 minutes is something I like. I did the same for the weekly, 1 hour, monthly 4 hour. So divide it by 60 and then you get to a certain number, then round it to whichever way you like and see whatever you like. Because obviously, if we use the daily, so that's we got to 24, someone might like the 30-minute and someone like the 15-minute. That's very dependent on what you like. 30-minute, you will see less price action, but maybe the entries are better. Who knows? All right, so that's the rule of 60. Then if we move on right here, entries. Write down your entry pattern. How do you want to get in sync with your established higher time from analysis? Exercise, determine your risk management, including risk percentage, stop loss, target, and break even / partial. Now, today, I want to go over the entries. So what type of entries are there? And there are 3 types of entries. Those are offset, ST, and re. So that's something we'll go into. Now, confluences. Trading is all about stacking up confluences. So if our higher time frame already agrees, that's already a confluence. If we are already coming off of a higher time frame premium or discount rate, that's another confluence. If our lower time frame agrees, that's another confluence. If we have SMT, that's another confluence. It's all about stacking the confluences. It's stacking those probabilities in our favor, essentially. Entry pattern, offset, ST, re. Here you can take notes what you want to study and which entry pattern you want to use. So that's something we obviously will get into. Let me grab it right here. Exercise, open a chart, pick out in hindsight a clear high time frame objective where price moved from one PDA to another PDA. So 4 hour, we moved from an order block, a discount, a bullish order block to a new high. All right, so we have that one price lag. For example, let me grab it right here. For example, we moved from here to all the way up to here. How could we have gotten involved right here and caught this move? And then you go into the lower time frame. This is a 4 hour. So you would go into the 5 minute or whatever time frame you determined and see how you would have gotten involved. Now, this thing is truly magical. Why is it magical? Well, if you do this, you will find a pattern that suits you. And the pattern that stands out to you is the pattern you want to use eventually. And that's very important because that's your edge. You might like an offset entry. I might like a re-entry. And that's a personal preference. So, and this, I live by this. Deep work sessions and doing these exercises, that's exactly how you form your edge. Because that's exactly what you need, essentially. Because otherwise you will just follow someone else. And if you do these exercises, then you get to your own understanding. These exercises are very important. So then take a look how you would have gotten involved using one of the 3 entry patterns, offset, ST, and re, and then see which one you like the most. Maybe you have a difficult time spotting offset, then just completely ignore offset and just focus on an ST, for example. All right, use the replay tool if you do want to. While using the replay tool, practice how you would get involved. Note any discovery, and make markups on the trades and subjects. Do case studies, etc., etc. All right, then we get into the conditions. This is low probability and high probability conditions. Now, how can we actually determine high and low probability conditions? Well, first off, we can take a look at the economic calendar. So for next week, for example, right here, we have the economic calendar. This is for next week. If I take a look at this and I want to trade EU, for example, well, I have to take into account there is some bank holiday. I'm not sure. I don't trade Forex, so I'm not sure how it affects EU. I don't think it's major, but it might affect it in London. All right, if we do take a look at that, red folder news, not much on Monday. So Monday is tradable. Let's say it's tradable. Tuesday, not much red news for USD. One red news, I don't mind, especially if it's CPI, FOMC, NFP. That's when I do pay attention. All right, we have NFE. That's the front runner of NFP. And we have FOMC on Wednesday. It might be better to stay out Wednesday. All right, then we note it. Thursday, not much unemployment claims. We can trade those. Those are not a major disruptors. Friday, NFP. That's not something we want to trade. So coming into the week, I would love to trade Monday, Tuesday, Thursday. Those are my high probability days, only based off of news. And then we can take a look. If we go back to the Notion right here, then here we have probability analysis. This is my own probability analysis. These are my low probability conditions and my high probability conditions. Now, of course, my low probability conditions might not be the same as your low probability conditions. How can you actually get to low probability conditions and high probability conditions? Well, gathering data, and that's why you have the data one right here. If you gather the data and you write down the losses you take and the next loss, so next week you also take a loss. Now, this doesn't go on to say you need to make a rule for every loss you take, but if over a 3 month data collection, you notice some kind of pattern that you are trading in London session ahead of NFP. And every time you trade in a London session ahead of NFP, then that might be a low probability condition. And why not just avoid that day if we can save some money on it? All right, and that's also to say, you might still win trades on these days, but if you do take a loss earlier in that day, on a day like that, then you might not even want to trade. If they are just a little bit worse, so it's still a winning day, but it's a little bit worse than normal, then why not just skip the day and save yourself that mental equity, that psychology that's so important. All right, then we continue. Journal. End of day markups, data, weekly review, performance review. This is something we'll go over as well. And use the journal. Use the journal in the trading dashboard right here. All right. And if you have determined your entry pattern, this is very important. If you have determined your entry pattern, if there isn't an entry for you on one day, then I don't want you to start looking for an entry or how you could have gotten involved. The exercises are only for you to find your pattern. Once you have found your pattern on how you want to get involved, then please don't start looking at days where you didn't get involved and start looking at a new entry pattern. Stick to that one pattern. That's very important for intuition to take over as well, and to master one thing, to master one entry pattern. And then once you've mastered one entry pattern and you feel like you're limiting yourself again, then maybe start looking at something else and start looking at more. But once you have found your entry pattern, stick to that entry pattern. If it didn't show up on one day, perfectly fine, but don't go searching for something else. All right, journal, simplify. Simplify is probably the most exciting stuff here. Simplify, and you'll see it if you check out my trades as well and my model. You will see how simple my model is. And that doesn't mean a simple model, because a lot of people think a simple model is a bad model. No, everything from market maker model, power of 3, AMD cycles, what else? Macros, those little time windows, everything else, every little thing is involved in my plan. Yeah, every little thing is involved in my plan. Am I aware that it is in my plan? Absolutely not. How can we get to that stage where my plan is everything and nothing at the same time? And I'm trying to explain this the best I can because it is a bit confusing, but there is a certain point, and because we utilize the higher time frame. If we drop down, for example, let me take a chart right here. If we drop down like this, and we have our market maker model here, and we have an entry right here. For me to see this entry, I only need to see this pattern. Does it matter if this is a market maker model and there's a consolidation here? No, it can be a nice target. But does it matter if this is the first leg of the market maker model? If this is the second leg of the market maker model? No. Does it matter if this is a power of 3? No. Does it matter if that's AMD? No. Does it matter if it's in a macro? No, because the entry will show up either way. And this is not to say that you need to trade this way, But why is retail so incredibly rich? They are making the most amount of money of all of us. How is this possible? Well, think about it. We are distracted by concepts. If we are distracted by concepts and we are focusing on the technical side all the time, then we don't pay attention to our mental. We don't have the mental capacity, the brain capacity, which we'll go over in Psychology Week. We don't have the brain capacity, the brain points left over to focus on our psychology, to keep our emotions in check, because we are distracted by the concepts. And now my plan, if my entry would have likely been somewhere in here. It's a market maker model. It's a power of 3. I might have entered in a macro. I might have entered at a perfect institutional order flow drill. Whatever. Does it matter? No. It doesn't matter, because whether I mark it up or not, my entry will still be the exact same. And that's if you truly grasp this, this is something very interesting to take a look at as well. So if you are marking something up, market maker model, then think about it. Is it truly essential that I mark it up? Or could I just trade at one pattern and let my higher time frame do the work? And this is why we tell a higher time frame does the work. Lower time frame is just a simple entry pattern. So if we know this, then a lot of people will say, but what about market maker model? What about the power of 3? Yes, they are all taken into account, but we don't mark them up. I don't even think about it, but my model automatically, because if these things form and the entry forms right there, then it doesn't matter, because it shows up and it also doesn't. I don't have to pay attention to it for it to show up, if that makes sense. All right, the higher time frame does the work, and again, we'll touch on it later as well. The higher time frame does the work. The only purpose the lower time frame has is to get in sync with what we've seen on the higher time frame. The lower time frame is not for you to establish a bias on. Also, where a lot of people go wrong, they are completely making up a bias on the lower time frame with a lot of candles. We only need to predict the next higher time frame candle. We make it very simple. Remove all noise. Everything that isn't necessary to be there shouldn't even be marked up. Everything that has no point in being marked up shouldn't get marked up. As well, for example, if these are Asian highs, and they are, that's fun, that's funny, they are Asian highs. Does it matter if they are Asian highs or not? Of course, some order blocks, some breaker blocks, some PD rays will be stronger when they are formed inside a kill zone. So for example, this breaker was formed in London. That makes it a little bit stronger when we do trade back into it in London. But these equal highs, because I know a lot of people would have seen this. We took out the Asia lows. We still have the Asia high intact. If I don't know this is Asia, I would have still targeted this high. See what I'm trying to say? My target would have been exact same, but I save my brain capacity, I save my mental capacity, because I don't mark it as an Asia high. So my chart is not full with 100 lines like this: Asia high, London high, New York high. This is the CBDR right here. This is the thing right here. This is this. No. I target the same thing. The CBDR is not relevant to me. If we have a CBDR, for example, right here, the central bank dealers range. I don't quite remember the times because I don't use it. I do have the thing right here. This, or let's say it was something like this. I just wanted to line up and make it. I want to cherry pick this one. All right. We have this order block, this breaker block lining up with this, with the one standard deviation of the central bank dealers range. Does that matter though? If I saw this coming right here into the breaker block, does it matter if this central bank dealers range, this random time, is lining up with something on a premium array? No, because if I remove this, I would have gotten the exact same entry. So what did we just do? we saved ourselves brain capacity, we saved ourselves mental capacity, that we can focus on our psychology instead. So that's something to think about. All right. 14, 16. Oh, yeah. All good, all good. All right. So simplifying doesn't mean you should change the core of your strategy. Very important. When you are changing stuff, don't change the core of your trading plan. So if you are trading an ST pattern and you suddenly start changing everything and you start trading off of different PD arrays that you used before, that's not the thing you want to do. The core should always stay the same. And then try to simplify it. Try to see how you can remove things rather than adding things. Removing things will always be better than adding things. Adding new rules is way more detrimental than removing things. All right, simplify. List all things you are currently using, then see which of these things can be removed. So if you are using a lot of stuff, write them down, see if they are truly necessary in your plan, like we just explained. Will the same entry still show up if you remove that certain thing? All right. Exercises, like we talked about as well. If you already have an entry model, then only study your entry model and nothing else. If your entry model didn't show up, then don't study how you could have gotten involved. Speaks for itself. Schedule deep work sessions, but only study what's relevant to your trading plan. So if you already have your trading plan set, if you already have your entry pattern set, don't study anything else. Study that core of your trading plan. My core, I would say, is mainly order flow. So I want to study the absolute living shit out of order flow. Nothing else. I don't want to study macros. I don't want to study power 3, etc. I don't want to study new week opening gap. Not relevant to me. Only the thing that's at its core. Keep the core the same. Don't change anything. If you do decide to change something, keep track of how many times you've now changed something and the reasoning behind it. A lot of time, you will change a lot of stuff and you will add a new rule. And this is what I did. I always added a new rule when I took a loss. And this way, I thought, oh, this is perfect, right? I just have a million rules right here and I should never take a loss. No, that's not what you want to do. So a lot of times the reasoning behind it is you take one loss and you think I should have a new rule based off of this one trade. No, if you have 100 trades backing up that ID, then it's something to take into account or to take a look at. If there's only one trade, only 1 week, even only 10 trades, then that's not something to take into account, not something to worry about. Only once you're past that 50 trades or 100 trades, then you might want to start changing stuff if the pattern repeats and repeats and repeats. All right, yeah, and dog and walk and walk, the holy grail, exactly. Execution exercise. Open a chart, pick out a hindsight clear. Is this the same one? Yeah, I think I've just, I organized the exercise. This is the same exercise. And then this other one, deep work sessions, very important. Study topics relevant to your trading plan. So this is a link to the discoveries inside the trading dashboard that you can find right here. If you go through archive, discoveries, it's the same thing, and write down your discoveries. That's how I got to my ST, tops and bottoms, and intermediate term highs, and a lot of things. If you were watching the enrollment 1 videos, you can see how many things I've done deep work sessions on. It's absolutely insane in my opinion. All right, let's get into the entries right now. Offset, ST, re. This Zoom is going to be a little bit longer. Why? Simply because Sunday, then tomorrow, we have a day off, and I think some people need to catch up as well. And this way we have as well a day off for me as well, because I do need some rest. And it's good to have a day off, let's say it that way. And then people can catch up as well, because I do know some people are still on higher time frame. And listen, that's perfectly fine, but then people have some time to catch up. All right, so we have 3 entry types, and they are in order. The first one is offset. Offset always happens first. Next one, always an ST happens. Not always, but 99% of the time when the higher time frame agrees, an ST happens. 3 is a re-entry, just a re-entry. So we have ST, offset, ST, re. Let me anchor this right here. All right, so let's dive into it. On the 4 hour, I've picked out a few examples just to make it as clear as possible. All right, perfect. So let's do some study in replay mode first, so we can get a better look at it. And then we go over it in hindsight. All right, so first off, if this is our discount array, so we are expecting higher prices off of this 4 hour balanced price range, this 4 hour ST, this 4 hour BPR. Then we would want to see something coming into something like this. A sweep of the low into the discount array, a move away, a breaker pattern, another move away, another displacement away. This is also order flow. Remember order flow that we talked about on the higher time frame. Same applies to the lower time frame. This is your re-entry. So let's frame this right here. This right here, below this low, is your offset entry. Then this right here, your 2, is your ST entry. Then this right here is your 3, your re-entry. Now, this can be completely different. Why? And this is the beauty of things. We don't actually need a market structure shift before we can get involved. And this is exactly, and this is where a lot of Twitter traders will tell you, whoa, secret sauce, whoa, don't need a market structure shift before getting involved. No, it's very simple. It's just an offset entry with SMT. So on GU or on dollar, this might have happened in the same exact lower low, higher low. Then you can get involved. And that's how you confirm a turtle soup. That's how you confirm an offset entry. This right here is a basic entry off of your ST, off of your balanced price range, where you don't actually need a market structure shift on these 2 entries. Why? Because you're already coming off of a higher time frame. The higher time frame has already done the hard work for us. So all we need to do is get in sync with price. Now, does this say if we use this offset entry, we use a very tiny stop loss like this and try to catch the bottom? No, give it some room to breathe. If this is our BPR, why not just enter like this and then cover these highs? Why not do something like that? All right, so let's dive right into it. Let's skip some price. Let me pay attention. I tend to skip price too fast in replay mode where I miss the entry. So let's not do that right here. All right, so this right here, this sweep of the low into the discount array could be our first entry. Let's just mark it up like this. Now, did we get some sort of SMT? Let me take a look. Yeah, we got SMT right here. Perfect. That's a nice confluence. Remember, we are stacking up the confluences. A nice little confluence. We have ST with GU. We can target the highs. I like to target the low-hanging fruit. So the low-hanging fruit for me is the target that absolutely pops out to my eye. It's a bit discretionary, but this first fair value gap absolutely pops out to my eye. The next one is this order block. The next is these highs. They are just so obvious to me. And I think if price is going higher based off of the 4 hour, then we should reach into the 4 hour order block. Remember what we talked about? PDA to PDA. So if we are coming off of a discount array, we should reach into a 4-hour premium array. Now we have this potential for 4-hour for value gap, but that's a little bit close. I don't like to go for a negative RR, so I like to target this premium array, this 4-hour order block. All right, which overlapping with this bigger order block as well. Then what can we do? From this low, from the lowest point, we reached into the discount array. You drag your Fibonacci to the order block, to the target. This right here, this area, this little area, this right here from 0 to 1, from 1 to 0, that's where you want to look for entries. Once we have reached that 4-hour premium array, don't look for 5-minute entries anymore. Then once we've reached that premium array, this 0 right here, we need something new on the higher time frame. And then we can look for new entries on the 5-minute. This way, because that's also what a lot of people do, is they scout for 5-minute entries when price is up here, all the way up here. Yes, then you are going to get a lot of losses. You're going to get a lot of drawdown, and it's not going to work. So that's very important to acknowledge. So this little area from 1 to 0, that's where you scout your 5-minute entries. If this was on a daily, that's where you scout your 15-minute entries, whatever time frame you want to use. Now, right here, if we use the swing grades, let me see. Which one did I use? Where's my swing grades? There it is. Oh. All right, perfect. The swing rates, these will, and these are, again, these are not necessary. Why not? Because if an entry shows up at 0.25 or 0.5, it will show up whether it's at 0.5, and we don't know. It's that if we don't know it's at 0.5 and this entry still shows up, we would still take the entry. So it's not relevant to us. But this is a great indication to see where we get a new offset. If we get a new offset, what happens? Offset, ST, re. If at 0.5, we know there's a likelihood of a consolidation. If there's a likelihood of consolidation, so there's something along the lines of this, the odds of getting an offset entry, a new offset entry, is very high. What happens after a new offset entry? A new ST. What happens after an ST? A new re. Cycle continues, continues, continues. 1, 2, 3. Offset ST re. Offset ST re. Only offset and ST happen, and then a re and another re can happen. So there can be re-entry, 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 but you have to be aware when it's a constant re-entry, and that's why we use the swing rate. If it's a constant re-entry, there will be a time where offset happens. And this is where a lot of people go wrong, because they try to enter all the way up here on this re, and they expect everything to hold, and then an offset happens, ST, re. Same cycle over and over, over and over. All right. So swing rates right here. Let's try to get involved. First entry that we got is this offset entry. Let's give it some room to breathe. We target these highs. This order block would be nice on a 4-hour. Once we've reached this 4-hour order block, we don't want to look for new entries. All right, this is an offset entry. And of course, offset entries are way, way riskier. So I don't like offset entries because this will fill way more times than an ST or a re-entry. So as well, an offset entry is likely a lower probability for me. An ST entry is lower probability for me. A re-entry is where I like to get involved. I think it's the highest probability entry because you already have order flow supporting you. Currently, we don't have order flow supporting us. Remember what we need for order flow to support us? Exactly. All right, so ST. See this ST right here? SIBI coming into the discount array. BISI leaving the discount array. ST doesn't have to be a picture perfect clean overlapping fair value gap as a BPR. No, this is already an ST. A SIBI and a BISI. SIBI coming in, BISI coming out when we are expecting bullish prices, of course. All right. And then now what do we need? We have this ST. We can enter off the ST. Now there's a few ways to enter off an ST. We can take the actual BPR like this, or we can enter off of a breaker like this. I like to enter off the breaker. Sometimes the breaker is the first line of defense. So price doesn't need to come all the way back into this fair value gap. It can come into here and then explode higher. I like to get in, just make sure to get in. That's what I like to do. Why? Our higher time frame has done the hard work for us. All we need to do, like I said, is on the lower time frame, get in sync with price. We just need to get in price. That's the only thing we need to do. Higher time frame has done the work for us. Only thing we need to do now is get in and give our stop loss some room to breathe so we don't get taken out before it takes off. That's the main thing we need to do. Let's target the same high. This is already, actually let's target it because this is already 4R. I wouldn't be, I would hold this full volume to 4R. Again, I like to, if it is 4R, I like to take everything off at 3R already. 3R is absolutely perfect. That's a lot of money on capital. And that's what I like to tell people as well. We're not here to flip accounts. We are here to have a lot of capital and make money off of the capital. We are not here to flip accounts. We are here to make a 10% gain in 2 months time on a 1 million account. We are not here to flip a 10K account to a million. No. That's the wrong mindset. That's a gambling mindset. That's something Instagram traders would do. All right. Right here, again, keep in mind this fair value gap. It could sting into it. For order flow now to be confirmed, we need a new displacement away. What's a new displacement? A new fair value gap created. Don't get a fair value gap yet. We sting into this fair value gap. We are already in the trade. Is this a fair value gap? Let me take a look. No, let's not count this as fair value gap. There's your fair value gap. This right here could already be your re-entry. Where this candle closes could already be your re-entry. Why so early? Just get in. The higher time frame has done the work for us. Just get in. So what do we have right here? Offset entry, ST, re, and see how with every entry right here. And again, if you want to refine it to this fair value gap, be my guest, do it. I'm not telling you not to do it. So don't take it the wrong way, but refine it and but make sure you get in. That's the most important part. Get in. You've done yourself, you do yourself a pleasure because you have done so much work on the higher time frame. Reward yourself by getting in and not wanting that 100R in one trade. No, just get in and reward yourself because you've done so extremely well on the higher time frame. Now, in this scenario, we are pretty high. Where do I like to cover my stop loss right now? Below this breaker's body, right here. If we do continue lower, we should not break this breaker. So that's where I like to put my stop loss. So again, that's something to take into account normally. And what I was always taught was cover your stop loss beneath a swing low. Yes, it's right here. Coincidentally, it's covering a swing low as well. But if the breaker was right here, I would have covered this. Cover the breaker and be efficient with your stop loss. But remember, Don't suffocate the trade. I wouldn't cover this breaker. It could work out 100%, could work out right here. But I don't want to suffocate the trade. Give it some space, give it some room to breathe. Now, a good indication, and that's also a thing on going break even, etc. If you were to enter right here, if you already were in this trade right here, and you entered somewhere in here below this fair value gap, for example, if we are now displacing away, if my entry was exactly here, go break even, go break even, go break even already here. Why? Order flow. Order flow is your answer right here to going break even. We came into this breaker. We've displaced away. If we are displacing away, the new displacement, that's a sign of respect, right? So price shouldn't come below this low anymore. This fair value gap should hold price 100%. If it doesn't do that, it will go lower. And you are completely wrong on the total ID. And something like this will likely happen. So right here, if you enter this, go break even right there, because price has no logical reason to come back. All right. Our re-entry. So our offset, ST re. And right here could be a re-entry as well. Right here. Why this entry right here? Well, it could have also been this one. Why this one? Look to the left. What's this? If we trade above this right here, if we close inside this candle closed inside it, this candle, this level shouldn't get traded back below. Ideally, in an ideal world, won't always happen, but in an ideal world. Also, it's overlapping with this. Perfect. I like to take the fair value gap that's overlapping with something. This overlapping with this breaker. Perfect. Cover this right here. Cover the bodies right here. The bodies. I like, if the opportunity is there and it has enough room to breathe, I like to cover the bodies instead of the wicks. The wicks are where the liquidity sweeps are. The bodies tell the story. Why is this? Well, a lot of, I'm just asking myself this question. I it sounded like I read it, right? Very cool. Sorry. The bodies on CFD as well, CFDs and Forex, the wicks might be different because that's where the manipulation happens. That's where brokers can open up the spread. Sometimes if you're with a B broker, the bodies of the candles is a lot less manipulation, if that makes sense, because the bodies on every broker will look the same almost always, but the wicks will have a way different stories, way different wicks, etc. All right, for target, by the way, this one, this is already, this was the initial target I liked as well. This was my low-hanging fruit. This was so obvious to me, this clear fair value gap. This is already a 3.7 R. See how the later we enter, the better we get an indication of where price wants to go, the better we can make use of a stop loss. So entering early is not always the better option. And a lot of people will enter early and that's why I say 2022 model, a lot of people can't get it to work because 2022 models everywhere. You need to know where you want to use the 2022 model. Where can we use the 2022 model? If our higher time frame agrees. Right here, 2022 model. Higher time frame agrees. We've done the hard work on the higher time frame. Perfect. That's when we can use the 2022 model. But entering the 2022 model right here, after one sweep of a simple swing low all the way to the left, you will get the 2022 model everywhere. And that's not something you want to trade, in my opinion. So you can destroy profile, might be great, but not in a trending profile. See what this is? A re-entry. Let's just take every re-entry. Did it come into this? No, this is overlapping. So with a fair value gap. The highest point of the wick is overlapping with fair value gap. So I take the wick, as you know by now. This is trickier. I would cover this breaker right here. Not covering this swing low. It's a bit too close for me. And again, this is not something set in stone. So figure it out on your own. Not throwing you in the deep end, but see what you like and experiment a little bit. Experiment what you like and where you like to place your stop loss. I like to place them below breakers a lot of the times if there's room, because breakers are very, very strong. All right. See how this is also an ST? So if you want, oh, what did I do? So if you want an extra confirmation, this is also an entry, but let's just leave it out because otherwise our chart will be way too much. Another ST, or sorry, another re right here, a re. Let's put it up because it can fit. It can fit right next to it. Now I would cover this. So as a general rule of thumb, I like to cover the next discount array. So that means if this is our discount array we are entering off of, what's the next discount array? It's this order block. If we are entering off of this order block, what's our next discount array? This breaker. And that's a general rule of thumb I like to use to get to a stop loss and where to actually place it. Let's enter this as well. Keep in mind, we are getting close to the 0.5 right here. This is not actually the order block because this is the order block right here. But if you don't want to miss the move, then just enter a little bit higher. Let's cover the next discount array. All right, what's the next re-entry right here? All right, we are at 0.5 right now. Keep that in mind. If you entered right here, and this would have been an entry, 100%, and you might have covered this low right here, you might have gotten stopped out. What does this create new? It's an ST, right? Or sorry, it's an offset. This is a new offset. What happens after new offset? An ST. This is an ST. Now, where does it happen? 0.5. Where is price likely to consolidate? At equilibrium, 0.5. 0.5 of what? This discount array, 4-hour discount array, to this 4-hour premium array. It's as simple as that. And in this move, and you could even refine it, only take, and that's what I like to do, only take entries in the discount. What's the discount? It's below this 0.5 line. Only take entries because this is your discount essentially. This 0.5 to 0 is your discount. Only take entries right there, and whatever it does in premium, let it go and still target. You can still target these things here, but don't take new entries in premium because essentially you are buying in premium. And what's the first rule of trading? Buying in discount. When you get into crypto, etc., everyone tells you buy low, sell high. Well, nowadays a lot of people tell you buy high, sell low. All right, so these are, again, they might be great entries for you. I don't like to trade these because you are essentially buying in premium. And that's also what you saw yesterday on the higher time from analyst video. USD cut from my head. I'm not sure if it was. I think it is. You are essentially buying in premium on that pair. And that's why I didn't like that pair. What is this? Offset, ST. Again, we don't need a very picture perfect clean BPR. That's not an ST. This SIBI is enough enticement to entice short sellers. Then we have a BISI. That's enough. That's an ST. So that's your ST entry. Then if it does want to retrace, you might get an a re-entry, something in here. But again, look at this price action compared to this. This is where you want to get in. This is where you want to stay out and wait for your target to be met. And this is where a lot of people go wrong as well. A lot of people miss out on this entry and they are already FOMOing. So they already have some sort of emotional issue, which makes them chase price. And that's the next step. That's the pattern. Miss this entry because you were out of focus. FOMO, get some emotions running. You see price here. You want to enter on every single market structure break. And then you might lose, you might overtrade, you might start revenge trading, and that's a full pattern. We have reached the 4-hour premium rate. Yay, perfect. Then we look at the 4-hour and we wait for something new. Either we break this high and this is a breaker, or we get a fair value gap or whatever, or we might get both. Perfect. We get both. We have this fair value gap right here, and we have this breaker. Now let's take this 4-hour fair value gap. And let's wait for price to trade back into it. All right. And of course, this is kill zones, etc. Use your kill zones well. Now we have this 4-hour fair value gap. This is confirmed by this price action right here. So the 4-hour closed something right here. The 9-hour, the 9 a.m. I believe. If we do, let me speed it up a little bit. All right, perfect. This swing low right here. That's your offset entry. Now let's see if we do get some sort of SMT right there. Let's use this one. SMT, I think there's some SMT right here. Yes, SMT. See this? Higher low, lower low. SMT, perfect. If you are going to take offset entries or ST entries or even re-entries, SMT is a great way, just another confluence, because SMT is everywhere. So that's why I also said on the higher time frame analyst phase, is SMT even necessary? Is it even relevant? Because if there's a great entry, if you just follow these protocols, if we remove this, we wouldn't even see SMT and the entry would have been the exact same. And that's when I say something might not be that relevant. It's just for your brain, for your emotional control. It might just be a placebo effect. It might just that you think, oh yeah, this is perfect because it had SMT. Yes, but you don't actually need it. All right, offset entry. Again, let your trade breathe, especially on offset entries, especially on these kind of turtle soup entries, because you're essentially calling the bottom. So let them breathe right here. And expect drawdown on offset entries, 100% expect drawdowns. Now, what is our 4-hour target? We came back into the fair value gap. This high is the first premium array we encounter. Discount array, premium array, PDA, 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 PDA. It's a song. It's a beautiful song. And then the 1, 2, 3, offset ST re, and we could make a whole song. Beautiful. All right. We already got our CB into the discount array. So take the lowest CB, I would say, for ST. So now we need a BISI. All we now need for ST is the only thing I'm doing right here is scouting for a BISI. That's the only thing I'm looking at. I just need to see a BISI for me to start getting interested. That's it. I just need a BISI. I don't necessarily need this high to get broken. Absolutely not. If this now creates a BISI before it creates a market structure shift, this could already be your entry. Doesn't need to have a market structure shift. All right. Yeah, perfect. If this next candle reached into this ST, could have already been an entry. You might have already even market executed right here of your ST of this breaker, because this breaker is forming, and we now have a clean ST. Could be a very premature entry. Again, give it some room because you're basically calling the bottom right here. Let's look at this. I like this breaker right here. I like this wick because it's potentially overlapping with something. All right, we're exploding higher right now. All right, so either you got in right here or you didn't. Let's put this ST right here. Again, for our target was this high. So we want to scout for opportunities and trades until we reach this high. Once we've reached that high, then we might want to stay out. Now, you could say as well this high. The next premium ray. Let's see what it wants to do there. All right, because we are now higher, and this is where a little bit of a discretionary trading comes in, etc. Because we are now this high, what's our first line of defense? What's our order flow? If I say first line of defense, is basically order flow. If we are going higher, where are we likely going higher from? Remember the reclaimed order blocks? These are support levels, like I talked about on this one as well, or this one. It was this one, I believe. This is now a support level. So we could expect it to come all the way back here, but it's very unrealistic to do something like this. So this right here would be an ST entry for me. Still give it some room to breathe, because why? Because we haven't established any order flow yet. Remember, this is just all one big leg up currently. It's not really established order flow. So let's just give it some room to breathe as well. All right, our ST entry. We are now in the ST entry. If we now get a new displacement away, we would see an re-entry. Boom, there's our displacement away. This could already be, once we confirm, and this is what I like to do. Once we confirm this fair value gap, I like to just enter straight away once this candle closes. Boom, straight away, right away this entry. I actually, let me go back as well. This was our support level. Again, just to give it some more room, cover the wick right here, not the body of that breaker, reclaimed order block, whatever you want to call it. For the offset entries, there's another trick you can apply. If you see, let me just hide this real quick. If you see the offset entry, so right here, we are coming into the discount array. And let's keep a track of SMT as well. You can see we have SMT right here. I don't have the line, so I can't see it clearly, but SMT is somewhere around here. All right, we're coming into the discount array. Now, there is a technique which is called buying on strength and selling on weakness. What does this mean? This is perfect for your offset entry or for a turtle soup entry. So this is what a lot of people do. Confirm ST, there's ST coming into the higher time frame discount array. Perfect. Now we can buy on strength, aka buy a buy stop above this candle, either the body or the wick, above this candle, and it only gets triggered once price trades above this candle. So if price trades above this, it will likely create a busy, etc., and then you can get in here. Now, if we create new swing lows, then for every swing low, you would do the same. Don't get triggered right here, because we already had SMT. We're coming off of a higher time from discount array. We only need to get in now. Same thing here, not get triggered. Same thing here. This candle swept this swing low. This candle was actually responsible for taking out this swing low. This is where you get entered. Now, of course, you don't cover this low. You give it some room to breathe right here. And this is as well, this is the funny thing. This is what I've been thinking about a lot. You know how ICT is a lot on turtle soups, and he used to brag about it quite a bit. on how we entered like this, for example, below this low, this swing low, and then he just entered, and you only basically saw the entry because turtle soup traders never really saw your stop loss, because the stop loss can be right here. And turtle soup entries, they look fancy, but the stop loss, and it's not necessarily that turtle soup entries get you a better RR. So a lot of things and a lot of times what got me thinking was ICT always shows the lower time frame, right? It always shows something like the 5 minute, the 1 minute. These turtle soup entries look very fancy on the 5 minute. But notice how our hard work is done on the higher time frame. What is it on the higher time frame below this low? It's a 4-hour fair value gap. Voila. That's it. There's nothing much more to a turtle soup entry. It's a sweep into a higher time frame discount or premium rate. Of course, on the lower time frame here, the 5 minute, if I showed this on without this fair value gap, and I had this on my Twitter, pretty fancy, right? Pretty cool, right? Pretty cool that I got my entry right here and I knew it was going to reverse. Why? Well, we had this 4-hour breaker and this 4-hour fair value gap. See how, and that's a lot of what a lot of Twitter traders do, and ICT did it a lot as well. All right, so let's get that back. And again, that's the buying on strength. So you could have bought right here, and this can give you a lot of very precise entries, but you have to remember, please give your stop loss some room to breathe. So cover the 4-hour fair value gap, because you're basically trying to call a bottom, and that requires you need to give your stop loss some room to breathe. All right, so again, that's offset with SMT, buying on strength, the candle thing, and selling on weakness. And we'll go over offset ST really throughout the week, so don't worry if you don't grasp it currently. All right, so this is an entry I would have liked just instantly execute once we see the busy, because the only thing I need for me to confirm this ST is a busy now. So once I have that busy, I just want to get in and get it over with and let the higher time frame do the work for me. And see again, this is 4.65 R. That's a lot of R. Perfect. Again, this right here could be your, oh, the body, sorry. Oh, pretty clean. Here I would cover the low, the bodies. All right, and let me apply the swing rates as well from this low. You don't need the swing rates. You don't need the swing rates, but it's a great indication. We just bought in discount. Now we did reach premium already, but we did come back into discount of our target. So this is pretty nice. Boom. And right here, let me just tell you that as well. Right here, like I said on the earlier entries, this right here, this displacement away, price has no business coming back below this low right now. Even coming back below this low. Price has no business in coming back down here. Not even a turtle soup. Not even a turtle soup, because price is either rebalancing or seeking liquidity. If there's a fair value gap in the leg, it's not seeking liquidity, it's rebalancing. So it will rebalance this fair value gap and then continue higher. If it does want to retrace, it will not sweep this low unless the whole idea is wrong and price does something like this, or it goes into seek and destroy. Perfect, but then we know the whole idea is wrong. So this order flow will allow me to go break even right here. This trade is break even right here. Price has no reason to come back down low here. And that's order flow. Order flow, new displacement off of the previous discount array right here. New displacement, break even. New displacement, break even. Right here. New displacement. This is a little bit low displacement. This is where your entry still is. So if it does want to come back to this fair value gap, you would have been taken out. So I would wait for a new fair value gap, new displacement, right here, break even. Price has no reason to come back. All right, perfect. We are on premium, no entry for me. Price might just mess around right here at 0.5. As you can see, consolidation at 0.5. And you can see again, just take a notice how price action up here compared to price action down here. These entries are so clean. These entries they will mess you up psychological wise. These entries will absolutely mess you up your psychology. First target met, perfect. That's already a lot of R. This would have been my entry, 4.65. Perfect, absolutely done for the day. Might even be done for the week. Which day is this? Tuesday. Well, that's a little bit early, but all right. So here, if we reach the target, see how once we reach the first target right here, price just becomes messy. And this is where a lot of people go wrong. They are trying to chase price still while it has reached the 4-hour premium. Remember, PDA, PDA. All this price action in between, this will be clean order flow. This is a market maker model. Doesn't matter. It's not relevant because we trade it either way. This discount to premium array will be clean price action. This will hold. Every swing low will hold. Liquidity sweep, external, internal will hold. Once we reach the premium array, see how ugly price action is. And this is where a lot of people get caught up. London session right here. Ugly price action. Why? It has reached the premium array. The clean move, the low resistance liquidity run has happened. The highest probability entries are here in discount of this discount array to this premium array. This applies to the weekly. This could have been very well been the monthly, the weekly, the daily, doesn't matter. All the same thing. All right. Then again, we might still reach here, but a lot of people will take insane amount of losses trying to trade this right here. And now we know why. We know why this is happening. We've already reached a premium. Price can consolidate, create new sentiment, create new liquidity, create new traders in the market, and then take out both sides and then continue. And that's what happens. So what do we do in this situation? We wait for a new discount array. Might have been on the daily, might have been on the 4-hour, who knows? Another clear discount array in this case, perfectly fine. We already made a lot of money on just these two moves. Monday, we made, let's say we made 3R. Tuesday, we made 3R. We made 6R. That's outperforming hedge funds right here. All right. See, again, this is not something you want to be involved in. This might have been news as well. This is not something you want to be involved in. You want to have this low resistance liquidity run right here. That's what you want to get involved in. All right, so that's offset ST re, and we'll go over it over and again and again and again. Let me go scroll through the chat right here as well. He says he needs rest after deciding to break down all of it into A to Z. No wonder. Yeah, exactly. I need some rest, man. Yeah, by the way, everyone, of course, the mentorship stuff is not getting involved into the A to Z. The A to Z guide that I'm releasing on YouTube, it's a very beginner friendly guide. I'm going to be explaining what an order block is essentially. And it's not stuff we get into here. So don't worry, nothing here is shared outside of the group. I thought BPR needed to overlap. Yeah, BPR needed to overlap, except for an ST. ST is, and that's why I say ST is not the same as BPR. ST doesn't need to overlap. BPR does always need to overlap. For example, let me grab it right here. This is an BPR, right? It's an ST as well, but I would still count this. If we just saw this price action, this SIBI, and this BISI, then I would still count this as an ST, if that makes sense. Is ST something you found out yourself, or it's something I found out myself? It's something I can show you. I think some people already saw it as well. This is all the stuff that I've done deep work sessions on, etc. And you can see ST. That's how I actually got to it. It's something I got to after studying marker maker models first. And I noticed the OG, that's how I call the original consolidation, then an ST, and whatever. It's it's a deep rabbit hole. I will need to watch this a few times. Methinks very awesome to see it so far. Yeah, this is a pretty long Zoom as well. I don't know how long we've been doing this for right now, but yeah, about an hour and 10 minutes. Rewatch this because we don't have a video tomorrow. So rewatch this and take your time. This is a lot of information to gather as well, and don't expect it to grasp it. My brain is absolutely fried. My brain is absolutely done. Don't expect you to grasp this within the first week. It took me a lot to get to this stage, so don't set realistic expectations for yourself. Outside kill zone, so sloppy PA, there's, yeah, for sure, sloppy PA expected. Quick thoughts on DXY next week. Yeah, let's go into it. Very nice, very nice. So offset needs SMT. Doesn't need to, but it is nice because, like we talked about, SMT is sometimes it's not even relevant. It's just a nice placebo effect, essentially. But if you want to use it and you think or you have data to back up SMT for your offset entries, then go ahead and use it. If you want the more precise entries, then yeah, SMT might be the way to go. But it doesn't necessarily need it, if that makes sense. I hope that makes sense. It's shit, but NFP will show the way. Yeah, I think I have the same thoughts on dollar right now. Let's go into it. Let's see. This is for the A to Z guide, by the way. Don't worry. This is me explaining an order block. Yeah. Dollar gives me a headache, man. Dollar gives me a headache. It's absolutely, it's so ugly right now. But let's look at it from a weekly standpoint. If I look at the euro, I'm expecting dollar to go higher here. So I'm expecting euro to go lower. Let me show you right here. Euro is, for me, primed to go lower right here. Like you showed in the Discord as well, this mitigation block right here. That's it for me. It looks primed to go lower. Of course, nothing confirmed perfectly yet, but there are early signs. This liquidity as well. If I was to, I'm essentially guessing the dollar. If I had a gun to my head, I would say it's going higher, but I'm not sure. And it is something to take into account as well. Yeah, same looking at GBP odd for next week. Have a look at that. GBP Australian dollar. Let's see. For my giga bullish, yeah, that's a nice confluence as well. GBP Australian dollar. Yeah, this is looking clean, right? Because GBP is pretty strong and Australian dollar is weak. So this is nice. If you could get a retracement right here into fair value gap with this order block, oof, that's a great trade, trade opportunity. Something along the lines of this. That's a great trade opportunity. Yeah, expecting Australian dollar futures for daily sips, then lower. Yeah, exactly same idea as well. This right here, continue lower. This looks perfect, overlapping with the breaker perfectly. Looks primed to go lower. Absolutely clean. Yeah, it's about it for me, bro. Don't want to kill your brain more. Take care, bro. It's no worries. You can ask me if there are any questions. If you do have questions for me currently, ask them and I'll go over them right here. We don't have a video tomorrow, so keep that in mind. Study the absolute living shit out of this video and you will be set. And apply the offset ST to your own exercises, to the things you want to study, to how you want to entry. Pick one and the thing that you like the most and study that one. and focus next week on how you want to enter that. I will set up the homework. So the homework is doing the exercises, doing the notion, and getting to an entry type. So either that's the offset, that's the ST, that's the re, and doing the exercise, how you could have gotten involved and how you would have gotten involved in older hindsight data as well. So I'll link a PDF below this Zoom, below when it's in Whop, I'll link a PDF file with the homework, so don't worry. All right, then that's it, I think. That's it, an absolute huge Zoom, but again, tomorrow, day off for everyone. And then we can recharge and go again. So, all right, perfect. I want to thank everyone. Everyone have a great day, have a great evening, have a great weekend. Thank you all for being here. And let's get to work again. Take the time to refresh your brain. Please do yourself a favor. After this Zoom, it's a lot to take in. So please do yourself a favor and don't look at your phone or don't fill your brain with new information. Let this process for about 5 minutes and your brain will process it. And this is a fun fact. Your brain will process it a lot of times over and over and over and over and over in very fast, in very speedy, essentially. So that's very important to not interrupt that process. Let your brain process it for a while. All right. Good night. Thanks. I'm going for a walk. Hey, with my dogs. Beautiful dogs, by the way. Beautiful, absolutely beautiful dogs. Good night. Thank you for being here. Thank you for being here, everyone. And I'll see you around. All right. Thank you. Bye-bye. Have a great weekend. Cheers.